Nadia, be honest. What's your level of conviction in these numbers?
We have pretty high conviction in these numbers, and it really is because when we saw the Q2 earnings estimates come in, we've been saying for some time that we thought the consensus estimates were too low, but I would say even we were surprised by the strength, and we think that momentum can continue. We are looking for 45% earnings growth for this year, and for next year, we're looking for 10%. But I would say that 10% does include a 4 to 5% drag from expected higher corporate tax rate, and also buybacks. Buybacks are accelerating. We're seeing announcements near the record level that we saw in 2018. So that not only provides some support to earnings, but also to the overall market price level. So we have pretty high conviction in that 46 year end and that 5,000 for December 2022.
Yeah, those buybacks, hugely important flow in terms of the way that the market mechanics function. Nadia, one thing that did stand out, though, from some of the calls was that CEOs are starting to get cautious about what is happening in terms of their costs and the friction they're feeling when it comes to doing business, be it trying to get hold of stuff for their supply chains, trying to get hold of labor. We're starting to see evidence, certainly in the data coming out of Europe, that demand is being throttled by lack of supply. Isn't there a danger that corporations feel that and actually have to make a meaningful downgrade in terms of their expectations?
Yes, that is something that we're closely watching. Obviously, the supply chain disruption and the renewed concerns around the Delta variants. We know that a lot of countries in Asia have a zero tolerance policy for COVID, and so that could further disrupt supply chains. But we think that corporations will be able to get enough supply to meet the demand. And in those cases, we do think that there's potential pressure from an inflationary standpoint, and they will be able to pass along some of those price increases they're seeing because demand is so strong.
So, Nadia, where do you want to be putting your biggest... Where do you want to be putting the most risk on? I mean, you had small caps get absolutely routed last week, and now we're seeing them climb a little bit higher. You already had sort of the defensive names doing pretty well last week. Now the cyclicals are more in charge. What do you think?
Yeah, we still have a cyclical and value tilt to our sector preferences. I mean, I will say we have taken down cyclicality just a bit versus the first half of the year. And so we have downgraded industrials to a neutral, and we have upgraded healthcare to an overweight. We still have a preference for consumer discretionary financials on energy. We're pleased to see that energy is bouncing back today. We know that the performance recently has been quite disappointing, largely due to concerns around the Delta variant and what it could mean for global growth and global oil demand. But we continue to think that this is temporary and the oil market will remain under supply into 2022. And right now, the energy equities are pricing in a WTI price of mid $40 range, which we just simply think is too low. And the companies in Q2 are starting to show capital discipline. And so we think that all of that is a positive. And we think that energy is sort of where you put the incremental dollar.
Nadia, we haven't had a correction in a very long time. Last week certainly does not count. I'm wondering how significant an event there needs to be to generate a correction, and whether or not a Fed taper would be in the mix.
Yeah, so we think that, of course, everyone is watching the job markets. The job markets, the recent numbers were very strong. If those numbers weaken significantly in September and October, I think that will give the market a reason for pause, because that is something that we all have been looking forward to, for a fuller recovery in the job market to tell us that the economy remains on solid footing. Now, what it means from a tape is, but that also does give the Fed some breathing room. But I don't think that in that scenario that it would be read favorably by the market. I mean, sort of our overall view is that we do expect strong numbers in September, and that will allow the Fed to get to that substantial further progress and look to taper later, announce tapering later this year, with beginning tapering in early 2022.
Nadia, though, to that point, Marty Walsh, the labor secretary, was talking about the fact that he's a little worried about COVID and then what winds up happening when it comes to the jobless world, and will people not come back into the workforce? And that raises the question, do we have to see an extension of the unemployment benefits? When you have officials like that starting to worry about stuff, how do you take that into your overall thesis when it comes to COVID and still being bullish in the equity market?
Yes, it's something, like I said, we continue to closely watch. We don't think that the labor market needs that additional stimulus, as we've seen for quite some time, that there is a lot of job openings. So there's also the disconnect in terms of some skills, a gap between skills and actual opening. And we think that that gap will need to be closed. And so we don't think that there will be a need for reinstatement of any sort of unemployment benefits. We do think that also the positive news this morning for approval of full vaccination of the vaccines, we do think that that will help also encourage people to get vaccinated and help for a more return to normalcy. So we aren't too concerned about like the job market at this point, and do think that it will recover in September as kids return to school.